Good morning, everyone, and welcome to the weekend update. As I mentioned last week, the action we saw this week really should not have surprised anyone. As I've said, this is typical August action that we are seeing right now. Volumes dry up. You sometimes see exaggerated moves to the downside. Then you'll see just as quick a recovery to the upside. Liquidity kind of disappears, and it really is a boring market except for brief periods of mania. We had sell-off Monday, morning bounce Tuesday, Wednesday, another day of sell-off. Friday, we had a morning bounce, and that is typical for this time of the year. As I mentioned, I go high cash into this period. 80 to 90%. Take a lot of half days. Don't try to push things. If the action's not there, you sit back. What you typically see move in a market like this are the garbage truck stocks, or the trash can stocks, as I like to call them. This week, just as an example, it was SNOA with its magic mouthwash. Must be magic because for some reason they chased this thing up 300%, from $5 up to 13 plus. Of course, all the way back down again on Friday. But this is the kind of garbage that tends to move in a market like this. And, this is the kind of stock that can be very, very dangerous for most traders. This is a scanner bag holder stock. These are guys who in a dead market chase whatever the scanner goes beep, chase this thing. They go up and they go right back down more times than not. And, for people who are looking for that rush from trading, who don't know when to step back, these are the kinds of tapes that can take away days, weeks, and months of gains very, very quickly. These are the kinds of markets where I actually like to step back, play smaller, play fewer, and take a lot of breaks. The advantage of being a trader is you determine your own time and your own schedule. And when the action is not there, why beat your head up on a stock that can go up 50 cents in a second and drop 70 cents in a second? You're working too much to get blood out of a rock when in the right tape the easier gains come. So, this is a kind of market that will mentally drain you for very small gains and possibly losses, whereas you could just sit back, relax, and wait for the better times to come. Now, the Dow chart, we had that pull back all the way to the uptrend line and the 50-day moving average, and we saw a nice bounce back. Now, what actually drove this bounce back, believe it or not, were the Qs, QQQ. You can see here it's still on overbought territory, but the stock that really saved the market on those days was Microsoft. Look at this move on Microsoft. Microsoft is 10% of the Qs. So as we've talked about in previous videos, these algos know which, and funds know which stocks they need up in order to counteract the down moves you see in most other stocks, because the goal is the illusion of the market making new highs, even though as a trader you're looking around and you go, man, the indices are at new highs, but 99% of stocks are red. These are the kinds of stocks that get moved to do that. Look at this on Microsoft. $15, $16 move in 2 days on this thing. Small cap index under the 200-day moving average. And you can see here, this has happened on a lot of stocks recently. And, we're going to go to my barometer here of the action in the market. And, this stock AI continues to just hit new lows. Now, earnings are going to be, I believe, September, first week in September. I'm actually looking, or I'm going to be this week, going to finally add to my long-term position on this one. I think it's time. 5 billion market cap. This is a multi-year long-term hold for me in a sector. AI along with space and EV and batteries, I think are going to be the three dominant sectors going forward in the next 5-10 years. So, been patiently riding this one down. I actually think my long-term average on this one is way, way up there, but I'm thinking this week I'm probably going to add to this one. Possible bottom on this one here could indicate a bounce back this week, but again, this time of the year, I'm in no rush to go into a lot of stocks. SBET. you know, this is what I would call a conviction swing for me. I've had a lot of these over the years, and recently even. I mean, the most recent one, and I'm going to talk about it a little bit more in the video, would be SNMP. If you recall, a couple of months ago on SNMP, actually, let me see if I've got the chart here on SNMP. A couple of months ago on SNMP, you recall back in May, June, and July, this was a stock that would not move. The research was there, the chart was ready, and it just would not move. And then all of a sudden, everyone come in, and you look back, and the stock is up 150%. SBET, the merger is complete. Now, this stock, from the way I see how it trades, is being heavily shorted. Now, the one thing that is in the advantage of the shorts right now, this is a recent listing. You know, the merger was complete. It used to be MTSL, but the short interest data out there is incorrect. So the short interest out there is not correct. It's not been updated yet. You see the action that's there every morning. Even pre-market now, we're starting to see it. You see a few thousand shares go through, wide spreads push down. Then when any kind of volume comes in, the shorts back off. Now, these conviction swings, you recall a couple of months ago on SPRT, same kind of action. This thing could not move. And then all of a sudden, actually, that's a weekly chart. Let me pull up a daily chart, give us a better idea. You know, this stock just kept getting hammered down, 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 down. And then eventually, they set it free. So still early days on SBET. The fact that they pushed it down through the 200-day moving average, this was the perfect time for that kind of action for them. You know, reduced volume, wide spreads, a little bit of panic with the down moves on the market. They had their update on Thursday, nothing but good information on that. And then we saw widespread drops. Another stock that kind of had similar action to this was AYRO. That used to be the symbol was DCAR, and it did the merger into the EV. If you recall that one last year after the merger, similar kind of action. You know, they got to do their crap that they do to these stocks, and then eventually it bounces back. Possible bottom here on Friday on this one. 200-day moving averages at 526. That's 75% higher. 20-day EMA, 6+. If we look here, let's see, I have another chart here. This is the 1 hour chart. You can just see how they've just come after this one all the way down here. Possible bottom on this one, deep oversold. And, you know, I have mentioned this before. In markets like this in the summer, oversold can become more oversold, just like overbought can become more overbought. So, like I've mentioned in previous videos, when we're in periods like this and I look at the swings that I have, I make sure that I'm okay owning those stocks and seeing them lower. If I'm okay seeing a swing lower, then that is a swing I want to be in. If I'm not okay seeing a swing lower, then that probably means I should get out of that swing. I also make sure that I always have room to add to my swings. Now, you'll see me adding a little bit here, a little bit there, trying some bounce trades on some of my swings, but I always make sure to leave room to add to more to my swing position, you know, and that's probably what I'm going to be looking to do on this one this week. UAMY, penny stocks are just out of vogue right now, like most of the really small stocks are out of vogue. Now, as I've mentioned before, we are repopulating, or the market is repopulating all these stocks. We now have over 100 stocks under $1. We have 350 under $2. We have over 1,000 stocks now under $5. Those numbers weren't even close to that back in February. So the next wave of stocks are setting up for whenever the year-end rally or the next mania comes. So, you know, when I see these kinds of slow periods, I'm like, you know what? It's okay. I know another nice period is coming. This is also a market where good research and due diligence, as we call it, kind of goes to waste. I mean, we see the absolute garbage, like Magic Mouthwash, go up this much, and then we have a company like SYPR last week posted, in my eyes, fantastic earnings, profit, growth, etc., and this stock has gone nowhere. Why? Well, because it doesn't have a low float. and the algos can't push it all the way up here to probably drop an offering in the next few days. That's the kind of tape we're in. Look at ELTK, profitable earnings report, growth, EPS. Stock did absolutely nothing for the moment. SNMP, look at this one. They were chasing this one on the scanners 2 weeks ago, up at 190, and here we are, right down, putting in a very, very nice bottom though. That's why I added to my swing there on Friday. Look at MACD on this one. MACD as oversold as it can get. 20-day is at 120. 50-day is at 112. That's a 20 to 30 cent possible bounce with, in my eyes, minimal downside, at least in the near term. Any continues to be an ATM machine. Whenever this stock has a steep sell-off, 40, 50 cents, you can be sure, at least recently, something's going to come where they come back and chase this one up. So crypto was hitting highs this weekend, pulling back right now. If it's pulling back in the morning, I could see them smacking this one back down, to do the same ATM trade that we've seen so much recently. Waiter Holdings. Nice bottom on this one. 20-day is 136. This has now found a very nice bottom area in this 108 to 110 area. When they come, it's they're probably going to chase it. Where will they come? I could see 130s and the scanners telling them, beep, time to chase. RSI in the basement. Last time it was this oversold, it had a nice move back in May. TKAT, NTF, crypto type play, nice little bottom there as well. Last stock I'm going to talk about is INDP. Now, microfloat. This was NTech, did the merger. There's two possible press releases coming, at least that we've been hinted to by this company. There's probably others out there, but I mean, if Magic Mouthwash can do this on a press release, if we get that, FDA drug application news on this one, and the way they chase low floats, that 50-day moving average up there at 12 looks very, very juicy. So that's it for the video, guys. Remember, this is a time to be sitting back, recharging your brains. Doesn't mean you don't have to trade, but as you've seen or should have seen in this last week, there's no point fighting these deep red days. Now, when the bounce days come, the bounces are very, very nice out there. So, maybe where you do trades on 1, 2, or 3 days out of a 5-day trading week, so be it. It's the summer. Usually, this is what happens. That's it for the video, guys. Enjoy the rest of your weekend, and I will see you all in the chat room tomorrow. Bye.